Well, hello and happy Halloween, folks. Joe with you here. It is October 31st. It is a Monday. Let's get into a quick market roundup. I've got my 2 cents. You guys know what to do. Follow along. If you'd like, just take the responsibility for it. So let's jump into a quick market analysis as for the first time in a while, the market seemed to take a break. And it kind of deserves it after the push that it had on Friday to the upside. Pretty aggressive. Now let's just go straight into it. The Dow, the S&P, and the Nasdaq down slightly, but it really doesn't echo what they've been doing the last couple of weeks. That's totally fine. They need a little bit of a breather here. The Dow down 0.39, the S&P just right at 0.75%, and the Nasdaq just over 1%. A lot of the Nasdaq weakness has to do with some of the larger techs, some of the communication companies that are missing. Some of those numbers have been pretty bad, but overall, there's been a lot of activity in the markets to the upside as of late. The Russells finished flat as well. Oil and gold down a little bit. The oil was down just under 2%. It's starting to flip a little bit now. These are the futures numbers, so they change. And gold pretty much in line, flat, slightly lower. So the advanced decline line here, we had a little bit more declining than advancers. Once again, a little bit of just a down day. This isn't a sell-off by any means. It's more of a stall. That's kind of when I would look at it. If you take a look at Friday's action, seems like the markets, or I should say the buyers, are a little tired at this point. Above, below the 50-day moving average, that is starting to get a lot more even. We're at 54% below, 46% above. I've seen that number at 80-20, and it's been slowly working the other way, meaning 80% were below, 20% are above, and it's slowly starting to come the other way. So this is a pretty general move across all the markets to the upside. So we'll have to see where that takes us. Let's jump straight into these charts because we've got what could be, I still believe, is an oversold bounce or a bear rally, but we're now above some pretty key levels here. The 50-day moving average right up at that 390 resistance, but we're parked here, and conveniently, folks, we're going into a Fed meeting, right? That is going to be Wednesday. Now, what I kind of need to see happen here is if we can park basically at the 390 area or right at that resistance here, we could roll over. It could be bad. Now, we have set an inverse head and shoulders if you guys want to geek out on that. But we are above the 50-day moving average, which with my top-down approach puts me on the bull side or optimistic at very least. So we'll see what these markets have priced in, if this is indeed just an oversold bounce. But seeing how the VIX has behaved over the last week as well, I really think these markets might be pricing in a Fed that is going to be comfortable with what they're doing and pretty proud of it. If the Fed comes out and says, hey, we're right on track, things are looking good, these markets will take off. And I think that's kind of being priced in, at least over the last week. See, there's my opinion. I hope you enjoyed it. So that's kind of where we're at this point. Let's take a look at the Qs. The Qs looks a little bit weaker. This is kind of what I would expect as a bear market rally. Now, obviously, tech has been struggling for a while. It was an outperformer. There's a lot of numbers that have been beat over the last couple years, or I should say the bar has been raised super high based on the surge it's had over the last couple of years. So, yes, lo and behold, missing numbers, projecting lower, not expected to grow as much, and that's what we're seeing. It is right at support levels where you could see the SPY quite isn't. This is right at it. It does still have, I can kind of call it that reverse head and shoulders, almost kind of making it up, if you will, but it is below its 50-day moving average. It is at an equal resistance level that it set the beginning of the month. End of September. So this does just have more of a bearish feel to me than the SPY. Now, I don't have a diamonds chart out, but it's gangbusters. It's incredible. In fact, folks, the Dow, I think this is the best October the markets have done since 1976. The Dow's up 14% for the month. So that October rally that you guys have heard about absolutely came true this year, that's for sure. And since today is the 31st, tomorrow being the 1st, it has definitely cleared that mark. So let's take a look at the heat map. It's the big techs, Google, Meta down again, Apple, Microsoft. Now, Apple actually had a pretty good move on its initial earnings, but it slipped a little bit. And Apple came out saying, hey, we're in line with the expectations. The iPhone wasn't exactly what we thought it would be, But we do expect a slowdown for the Christmas season and a glass kind of half empty moving forward. And that took a couple of days for it to digest. Now it's down today, but so are the overall markets. Let's see if that continues to spill over. Friday, I don't know what to chalk that up to. Amazon missed. They had bad news, and these markets just shot up. Everything just rallied. Outside of anything that missed or had bad news, the markets really pushed higher. This is a little bit more realistic. Lots of browns, some reds in there. Could just be the hesitation after last week's moves. So what do I got? Well, it's pretty obvious. I'm flat. I'm absolutely flat for the weekly outlook, and I moved to a +1 just for the fact I'm above my 20, I'm above my 50, and the sloping, I got a 20 sloping higher, and the SPY is above its resistance that it set back in June. So it's a reluctant +1, but I have to do my top-down approach, and I know that I still have a bearish bias, but a lot of my bears have just not been going down. Lots of bears being squeezed out of these markets right now. So if this is indeed a bear rally, it's a very, very strong one, to say the least. So have to keep this thing, I'm kind of sideways to +1. I kept the weekly outlook at 0 for one reason. We have a Fed announcement. It's a coin flip. Not sure what's going to happen. Let's take a look at some of the trades that we've been perusing through over the last couple of weeks. XLI, we got the financial industry. It's more of an emerging stock. I don't think it's really outperforming or breaking into new highs. It's definitely just barely starting a trend to the upside. But Campbell's is good. World Wrestling Entertainment, General Mills, I like to the upside. Newmont still looks good to the bear side, and Toll Brothers as well. Let's take a look at a couple of them. This is Campbell's. This is one that came up on our Wednesday class, and it has a few times, but I do like that it did confirm a breakout. So I do have some traders. Hopefully we're discussing it back in this area right there, or I should say right here. That's Wednesday of last week. No, I'm right. It's this candle here. So the confirmation was Thursday. Beautiful fall through on Friday, and even today up another 0.36%. Looks like it's got that breakout of this resistance, and I could take it all the way back here if you guys want to take a look at that in May. So it's super strong. Looks pretty good. Double check the earnings. I'm not sure if these are passed. I think it is. One of these actually has them in the next day or two. So make sure you double check. Boy, I should have made mention of that, right? Here's World Wrestling Entertainment. This one's kind of the same idea. More of a diagonal play on this. It looks really good. I liked the breakout above that 74 mark, and it's just been churning higher. Interesting candles, right? Gaps up, trading lower, opens here, close here. Opens up again, closes lower. A little bit of gapping in between there, but the general motion of the whole flow here over the last week or so has just been diagonalizing itself up. So it still looks really good. If you guys want to place something sideways, credit on that. Looks good. Please double check earnings. Thank you. Here's General Mills. This one was a sideways trade for a little bit, but we had a discussion a few weeks back of a symmetrical triangle pattern. And we talked about this, saying, well, you could play this sideways between, I believe, 82 and down here at about 75. But if you wanted to play the symmetrical triangle squeeze, you want to play it to the upside because this is coming from an uptrend. And lo and behold, it did shoot up Wednesday as well. Or Thursday, excuse me, and then continued on Friday. And Friday actually put it above that resistance here at about 80. Is that 81? Excuse me, folks. 81, 82 is right up here. So it looks really good. I like it as a continuation. For you who just put it on your watch list, if you think it's a little overextended, it might correct, pull back, or consolidate. You could jump into it later on. Let's get to the bears here. Got Newmont. Newmont was on the bear watch list. This was a consolidator for quite a bit after it had a pretty substantial drop coming out of July. But since then, basically played sideways here between 46 and the low 40s. So you got about $6 in between there. It's been bouncing back and forth. I still think it actually has the ability to stay in this range. However, if you Bollinger Band guys or you want to play range bounding, it looks like it's on its way back down. So you could play something from where it's at to the support at 44 or 40, or a break below 40 for continuation. So nice little trade to the downside. The last one I got here is Toll Brothers. It's in a pretty good sector, pretty good industry. I zoomed in a little bit deeper on this because I do like how this came up and hit its 50, and it's done it a couple of times. Here it failed on a 20, but here it is back up in the 50. Now this is a big move to the upside on Friday, But today it gapped down and has traded lower. It is off the low, but it did trade lower. So, and I like the volume. It's a little higher than Friday's move. If you're keeping track of that, because Friday was just a general move to the upside. It doesn't look like Toll Brothers really participated volume-wise. So I'd expect a little bit of a rollover here, maybe to 42, or take a look at June's low, retested it there at the end of September, somewhere around the 41 mark. So that's the trades that I'm looking at. Not really excited to jump into anything before that Fed announcement. I'm wondering if the markets have been pricing in a less hawkish Fed. We have seen some bearish numbers in the manufacturing. We've seen housing coming down. All of that stuff is starting to go the correct direction for slowing down. GDP threw me a little bit because it ticked up, but it is a lagging indicator. Unemployment is also a little bit lagging of an indicator. We'll see. That hasn't really gone down or up. It's just kind of in line. So we'll see if those follow suit. So I'm thinking this could just be optimism pricing in, hey, the Fed's going to stay on track. At very least, they're not going to increase interest rate hikes. So maybe it could be preemptive purchasing that's what we've been seeing over the last little bit. Once again, that's my opinion. Earnings have been less than ideal, especially in the tech side, and things have been punished for it. So keep that in the back of your head, because there's really not much to build on in the future if companies like Apple and Amazon and stuff like that are coming out and saying, hey, we're worried about future growth. So they might just, if they don't sell off anymore, they might stay stagnant. So if you're going to err to the bear side, keep it in the bearish pond, right, over there. Focus will be on the FOMC. I don't think we do much of anything for the next couple of days until that Fed comes out. The reaction will be based on the Fed outlook. They're going to do 0.75%. That's expected. They're going to do it. But if Powell comes out and says, hey, we are comfortable with where we're right on track, things look good, the market's going to take off to the upside. So it's hard not to be a little bit bullish, especially when we've seen the sentiment move to that side over the last couple of weeks. I just perused really quickly earnings SBAC. It's SBA Communications. That's going to be a big one. Aflac. We got American Waterworks and Hull Logistics. So that's on the docket. There'll be more tomorrow. There'll be more in the middle of the week. So keep checking earnings as we're still in earnings season. All right, guys, that's all I got. You have a happy and safe Halloween, and we'll talk to you next time. Bye, folks.